I would agree with that. And I think to set the scene a little bit, it's maybe worth thinking about where we were at the start of the year and where we are now in terms of expectations that analysts and economists had for the US consumer. And like you said correctly, things are looking much more resilient. The consumer is much stronger. Just to give a couple of data points there, if you look at the retail sales data, the growth rate doubled month on month, so showing good momentum there. And I think part of the reason is the jobs data and the wage growth data from the past few months being better and less of a headwind than people had been expecting. And then I think I think that's the backdrop. And if you then look at what we've heard from companies so far, I think companies are generally idiosyncratic, but they offer clues about what's happening beneath the surface. And so if we take, Home Depot earlier in the week, we saw there, and what stood out to me was the shift in how consumers are spending. So the drop off in high-end renovation spend and the pickup in smaller ticket items like, putting some plants around the house or updating your paving, showing that shift in spending. And then Target, which you mentioned just yesterday, I think there was a big drop off in sales growth. And I think that's partly explained by the mix of what Target sells. So about 20% of what Target sells is what you'd call, essential grocery staples type products that people need no matter what. And the rest is discretionary and, nice to haves. Yeah. And so as consumers do pull their spend, you've seen that impact Target.
Right. And of course, consumers are being a lot more discerning. Looking ahead, though, I thought it was really fascinating before I started this interview to read what the San Francisco Fed had been saying about excess savings, and that most of the excess savings accumulated throughout the pandemic are pretty much run down now. So what does that tell you looking ahead about where the drivers for U.S. consumer spending is going to come from?
Yeah, I think the rest of the year is going to be more challenging for the US consumer. So we have, the excess savings from the pandemic pretty much all run down. And again, if you rewind a little bit, for, the poorest Americans, they'd run those savings down much quicker. So they've been in a tougher spot for a longer time. I think that's one thing. I think you've got the sort of the looming specter of student loan repayments picking back up in the US. You obviously have the rate dynamic feeding through various parts of the market. And if you look at the commentary that the likes of Home Depot, the likes of Target and others have been giving, they are pretty, they're not optimistic, let's put it that way. There's a lot of challenges ahead, and it's going to be tough to get excited about consumer spending incrementally from here.